Peace and blessings, everyone. I'm Bree.
And I'm Lisa.
And you're watching the Ask Bree and Lisa TV
for another episode of Caffeine and Cash Flow.
Yes. All right. Greetings. Hope everyone is doing okay. We are wrapping up the month of September, and it's been a great month, to say the least. September, as you guys know, if you've been following us, is Life Insurance Awareness Month.
Liam,
hashtag Liam. So Life Insurance Awareness Month, it's been great, really just tuning in with our audience, tuning in with our clients, and our family and friends about the importance of life insurance.
Mm-hmm. We enjoy taking the time to educate you a little bit, tell you a thing or two, advise a thing or two. So what's going to happen is I'm going to go ahead and just talk about a couple key points, and Bree's going to take the time to elaborate on them.
Yeah, we want to recap on some of the topics that we might have gone over this month, and every week with our life insurance awareness series,
4-part series.
Yeah, and just elaborate and possibly even touch on some keynotes that we might not have touched on throughout the month. But most importantly, we just want to elaborate on the fact that Life Insurance Awareness Month is not just a month. Life insurance awareness is every day, all day, any month, every day of the year. So
right, it doesn't start in September and it doesn't end in September.
Right, exactly.
It's an everyday thing. Okay. All right. So one of the key points we want to talk about is your family's financial safety net. So go ahead and elaborate on that a little bit.
Okay. So in terms of family's safety net, what that means is life insurance is not just about you, just about the person insured. Life insurance is for everyone involved, everyone close, everyone that depends or loves or cares for the person that's insured. So for an example, I'm insured, right? I am insured, and I did it not just for me. I did it for my wife, Lisa. I did it for my parents, for my sisters, for my nephew. I did it for the ones closest to me. Reason being is because, God forbid, something happens to me prematurely, I get sick, or I pass away unexpectedly. That death benefit covers any of my debts. It covers final expenses in terms of funeral costs, medical costs, depending on what happened. It covers those things, so my family doesn't have the financial burden of taking care of those things. If I pass away prematurely, the most they would have to do is just receive a check and grieve in peace. So that safety net for the family is very important.
Yeah, and she mentioned like if she gets sick, right? So you don't necessarily pass away from getting sick, but what if
sometimes?
Yes, no, I'm just saying like it's another like you don't always just go, okay? Because
right.
my point is that it can also be used while you're alive. The death benefit can be used while you're alive. So if you get sick and you're out of commission, it still, as Bree noted, takes the brunt away, the worry, all of that away from the people that would have to take care of you, the people who would maybe have to, do all the things that you were doing.
But you're touching on something though. You're touching on not just life insurance. You're touching on what could be and should be attached to life insurance, which is living benefits, right? Is that what you're touching on?
Right.
Yeah, and that's something that we haven't really, we haven't really dived into those details. So
we mentioned it a little bit,
but you didn't mention it specifically as you're flirting around that concept. And what she's flirting around with is living benefits, life insurance or term, life insurance with living benefits. Now, continue, like in terms of what does it mean to have life insurance with living benefits? Why that's so important? Now, you elaborate on that. You already were, but now that the people know.
I thought, okay, it's cool. So yes, living benefits, right, is something that can be used while you're alive. So if you were to get sick and you can no longer take care of yourself, you can no longer bathe yourself, maybe you can't feed yourself, anything like that, any chronic illness or anything like that, the death benefit that you do have in place can also pay out while you're alive, so it can take care of you, right? So people don't have to struggle with now they got to pay for you, take care of you, along with taking care of maybe their family and all these other responsibilities. So it just takes away that worry and it takes away that burden from them as well. So whether you're not here, you pass away, or you just get really sick, that life insurance is in there for that safety net purpose.
Yeah. Yeah. I know you might have been like touching on like, the cash value of IUL.
No.
Was that it originally?
No,
Okay.
no. I was
Okay.
definitely no. We're not gonna go into
We're
that.
not gonna
You ain't hear none of that. None of that. That's for another episode.
feel free to ask questions about it too, because
yeah.
Mhm.
Yeah. Okay. So the second one is the real cost of not having life insurance. Like it can be a lot greater than.
Yes, the real cost. Ooh. Okay. The real cost of not having life insurance. Like, what does that really mean? A lot of people, and by a lot, we mean the people that's underinsured or not insured at all. They have this stigma around life insurance that it's too expensive. And the thing is when you really think about the concept of getting sick, critically or chronically ill, or you or someone in your family passing away, people go through a huge financial burden. And that's why you see a lot of people jumping on GoFundMe's to pay for the burial of their family member. And we just want to make one thing clear. GoFundMe, that's not proper life insurance. Asking and begging people for money to bury your loved ones, it's not okay. I get that it works for some people, but I've seen people go so long without reaching the financial goal on GoFundMe's, and it sets them back on the burial process, on paying the debts and dues for that family member. So the grieving process is it's thick.
Mm-hmm.
It's crowded with the bickering back and forth, the stress
and
that comes. It's prolonged, and the stress that comes from just not being able to grieve in peace. And I feel like paying $50 a month for $1 million in coverage versus not paying $50 a month. Someone passes away and now you're begging people, strangers and family and friends alike, you're begging them for money, anything, pennies, dollars, anything to help you get up to that goal to properly bury your loved ones. And the real cost is a lot more stress. That's the real cost of not having life insurance. And stress causes disease. Disease is illnesses. Illnesses can lead to death. Why go through that when you can implement the proper plan right now? Get insured, get protected, and not put you or your family through that. Because we feel like life insurance is love insurance. When you truly love your family, you think long term and you think, all right, if something happens to me, or you're a breadwinner in your house, if something happens to me, will my spouse or my partner or somebody will they have enough money to go on for the next, I don't know, 6 months, 6 years, 10 years? You got kids. So exactly, it's more than just coverage. It's definitely peace that comes with having that in place. Yeah.
That correlates and goes right into the next one, which is brings peace of mind. So
oh yeah. So
that's exactly as what Bree was stating, right? It brings peace of mind. So as she stated, with everything that was said, it brings that peace of mind to not only you, because you know that your family is covered, right? Your family is well taken care of. But then it also brings the peace of mind of the people who are depending on you in any way, right? Even if you're not a breadwinner, because we mentioned that too. You don't have to be the one that's making the most if people are depending on you in any way, whether that's being taken care of, just, making sure the daily activities need to be done, like in any way, shape, or form. It brings that peace of mind of just knowing, like, okay, if I'm not here, do I have what I need in place in order for my family to feel supported?
Right. And a lot of people have that exact, maybe not a lot of people, but some people, of course, have that same mindset, but they're thinking about a 9 to 5. As long as I got this 9 to 5 job, my family's taken care of. As long as I got this 9 to 5 job and I show up and work and get a paycheck, my family can eat. My family can have a roof over their head. My family can have clothes on their back. But people are not thinking about the fact that a 9 to 5 job, it's not a solid source of income, because you're replaceable. You can lose that job. You can get fired. The job can go out of business. You can get sick and can't work, and then they fire you. Then when you live in a state like Florida, a job can fire you without explanation. They have that right. It's sad but true. So jobs are not permanent. No matter how much you love the job, hate the job, they're not permanent. So people have that concept around, as long as I got this job and I have this paycheck every 2 weeks, my family is good. But people that got a bigger vision, a long-term vision, they know, if I get insured, permanent insurance, and I own it, and I invest into this, my family can be taken care of for a long time, because it's going to pay out in this, that, and other. So whether it's term, whether it's whole life, or whether it's an IUL, there's so much more that goes into the concept of, if I do this now, my family won't have to feel like this or go through some undesirable situation later.
Right. So in your example, you're just saying, like, unlike the peace of mind of what a 9 to 5, what the illusion of a 9 to 5
The illusion,
brings,
yeah,
life insurance brings
brings
that peace of mind, because you know that your family is covered.
Yeah, it's more of a reality versus an illusion.
Okay.
Yes,
Okay.
that's what I meant.
Okay. I get that. I get that. So if you're going to mention that to bring up another point, what about those individuals that are saying that, like, okay, I'm insured. I'm insured through my employer, so that means that I'm covered. I'm taken care of. All is good. If anything were to happen to me, my family is going to be taken care of. What would you say on that?
Well, first and foremost, to that person, I would say, congratulations. You've taken a good step forward in terms of just understanding what being insured can do. Congratulations. Like, you're ahead of most in just the concept of knowing, all right, I got insurance. It covers some things. But what I would also say is, what happens if you get sick or you get injured on the job and you can't work? What happens if they fire you? What happens if you end up hospitalized from a sickness or injury and you can't work?
Or what happens if you just, like, decide to leave that job and go to the next job, but maybe that next job doesn't have, the benefits needed? What if they don't have life insurance to offer you?
Well, I've seen people stay at a job they hate, at a job that did their mind, body, and spirit harm. I've seen people stay at that job, especially older people. They'll stay at a job that's a dead end. They're not going to make any more than $800, $900 a month, if that. I've seen them stay at a job because that job had insurance that helped with their sick spouse, their sickly spouse back at home. I've literally seen that before, because I've seen someone that was she was older woman. She worked harder than anybody I've ever seen, and it was a physical job. You had to be on your feet all day. You had to deal with customers. It was a very physical job, and I seen her work harder than a lot of young people that I came across at that same company. And one day she was just kind of venting to me about, how she really just can't stand it here. And in my head, I'm just like, you're really too good for this place. You deserve more than what they're paying you, what they're giving you. You could find. She was like, first of all, at my age, because she was in her 50s, 60s, not even 50s. I think she was in her 60s at the time. But she had a very, very sickly husband at home. I think he was battling some type of sickness. It might have been cancer.
And so she was betting on her job's life insurance.
The insurance at the job that we were both working at, that insurance covered a lot of the bills that came with his medical issues. Mm-hmm. It covered it, and I seen her stay at a place that she should not have been in because of what it did to her. It was probably making her sick from the stress, and she stayed there because of that insurance.
So, and
some people won't leave and go to a better career, a better opportunity because, like you were saying, they don't offer the same benefits or the same insurance. So they're like, oh, I'm going to stay here. I hate it here. And that job pays more, but they don't got insurance. Like, it's a complete deal breaker. But I'm like, if people value insurance at an employer that bad, the same employer that can let you go at the drop of a dime, the same employer that's going to offer you insurance that you're renting, not owning. If you value it that to that degree, why not take ownership of your coverage and get permanent coverage?
Or even term, like permanent or term, especially depending on how old you are. Like, and I think the point to that is either way you're going to pay. You're not getting life insurance or any of that free from your job. Like, there's still money that's coming out of your paycheck. There's still something that's coming out of your paycheck. So would you rather, like, in a sense of, would you rather rent a Mercedes or a BMW or own a Mercedes and BMW, right? Would you rather rent a nice 5-bedroom, 3-bath or whatever house, or would you just rather own that house?
Some people like renting, though. Some people prefer renting,
and that's why there's some people that just prefer to have what they have with their job as far as life insurance. And like Bree said, that's not a bad thing. At least you're covered in one way, shape, or form. We just want you to think of the bigger picture, right? Think of the end goal. So even if your job is offering, just get it. Then just get a quick term, like what Bree mentioned earlier, $50, $1 million in coverage to top off or to go with what your employer has for you. Like, just, there can never be too much, right? Like, honestly, like with inflation and everything that's like that, like $1 million, it should be more, because by the time, depending on how old you are, by the time you pass $1 million, it's probably going to be worth like what, 500, so
500 what?
$500, $1 million worth with inflation.
$1 million is going to be worth $500 in like an equivalent, or you mean like 500,000?
No, like 500. Either way, it's going to be less.
Yeah,
it's going to be less.
Because $1 million today is not what $1 million is going to be later. Because now $250,000. Never mind. That's another reference.
Small. It's just going to be a lot less, right? Because inflation is going to go up, taxes are going to go up, the cost of living is only going to go up. So at the end of the day, you can never have too much. So if you're going to have what you have with your employer, that's fine, but just add to it. Do something that you own, that you own, so you can just have that peace of mind in your back pocket, knowing that if anything were to happen, the employer, the job goes out of business or anything like that, at least you know that you have this back end coverage, and you don't, to Bree example, have to stay in a job because it's the only way that you're getting security, or just feel stuck at this job because you can't find anything else that is going to be able to top that insurance. You don't want to just feel stuck in a situation just because you don't have something else in place. Right. And so another thing is life changes. So should your coverage.
Yes. Yeah. Because the coverage for a single person, somebody that's single, no spouse, no kids, their coverage at one point is what it is. They might only need They might only need $100,000 worth of coverage based on their insurable needs. Well, like, when you do the financial needs analysis, which we do, when you do a financial needs analysis, that's how you discover what someone's insurable needs are.
Mm-hmm.
So a single person, no spouse, no kids, no house, their insurable needs could be as low as $100,000. They could be lower than that, could be higher, depending on their specific needs. Now, take that same person, a year later, they get married. A year after that, they have kids. And depending on how many kids they got, their insurable needs just went up because they got married. They got 1 or 2 kids, if not more. And then, now the family's bigger. We need a bigger home. We need to get out of this apartment.
Right.
So they go into, purchasing real estate, purchasing a house.
Right.
So your debt just went up.
Mm-hmm.
And then you're thinking about your kids' future and like maybe college, their educational costs.
Mm-hmm.
That just went up.
Yeah.
And you got a wife. And what if she makes less money than you? Or maybe she's a stay-at-home wife and she doesn't work at all. Or maybe she owns a business from home, a small business where she takes care of the kids or homeschool the kids. But either way, she makes more or less than you. Your insurable needs just went up tremendously based off little things like that. Mm-hmm. Mm-hmm. And then say, for instance, spouse passes away. Insurable needs just changed. Mm-hmm. Between deaths in the family, births in the family, and things like changing careers. Yeah. Your insurable needs just changed because of that changing career. Yep. You might be making more or less. Mm-hmm. So all of those factors and then some, there's some that I'm probably forgetting to mention right now, but all of those factors can alter the insurable needs of one individual. Like for us, our insurable needs are pretty low because we don't have much debt, we don't have kids, and we haven't purchased our first home yet. Yeah. So our insurable needs are considerably lower than most couples, but our insurable needs, believe it or not, is low, but we still got more coverage than we necessarily need because
and go keep going
because there's never too much. We want to make sure that if anything happens to us individually, the other is taken care of, and if something happens to us together, our family doesn't have to worry about any of the debts that we may leave behind. They won't have to worry about any of those things because we got so much coverage. So, just knowing your insurable needs is key to knowing how much coverage you actually need, because there's, believe it or not, so many people that's just underinsured. So many people that believe in insurance, they believe in life insurance, they have it, but they don't have enough because they didn't sit down with a licensed financial professional and figure out what exactly do they need to cover their life.
Yep, I agree 100%. And so the last thing is a legacy of strength.
Okay, legacy of strength.
Yeah.
All right, so with that specifically, we're getting into the realm of like index universal life insurance, an IUL, or whole life, basically any type of policy, which there's only 1 or 2 that exist, that has a cash value concept to it. Because when you're paying for life insurance, but you also have a cash value concept attached to it, mm-hmm. You're building a legacy. You're building a foundation of strength for not just you, it's for your family and generations after you. That's exactly how a lot of wealthy families, they didn't use IULs per se, because IULs didn't exist at the time of, the Kennedys, the Rockefellers and things like that. But they did use permanent life insurance to mm-hmm. implement the concept of infinite banking and generational wealth. They utilize permanent life insurance. The wealthy have been doing this for years. Our job is to bridge the gap between what the wealthy have been doing and what the rest of the
rest of us,
the rest of the population really don't have awareness about.
Right.
But when you're building cash value and it's compounding interest year after year after year, mm-hmm. based off practically a very small investment that you start early on, your grandkids and your grandkids' are going to eat and live well based off a decision that you make today.
That about sums that up. You can literally invest this much and then end up having just an ongoing.
Ongoing. And then when you're doing it right, because this is how the Rockefellers did it. They implemented something like this using permanent life insurance. And what they turned around and did is they strategically placed these policies in to the wills and trusts of the Rockefeller family. So that means every Rockefeller child that's born, they have a piece of this, but it's written in the will on how they get the money, when they get the money. There's standards. On because if not any Rockefeller can have access to this unless they follow the standards and the rules that was written out in the will that was put there by the earlier Rockefellers. When that will and trust is basically saying, like, for an example, I want to believe part of the standard is, that a Rockefeller child or adult, they have to own a business, make this much money, have done this in the world, help this many people, done certain things to qualify for that Rockefeller for access to that infinite bank that they created early on.
Yeah, they did not just give it to every single person that's in their family. They absolutely had to hit those standards.
Yeah.
And I think you're right. One of them is like owning a business, just making an impact on the world. Like they need to be and do something with their lives. They can't just be like freeloading it up. You know
what family that did happen to because they weren't strategic?
Yeah.
I believe the Vanderbilts.
Is it? I think it's the Vanderbilts.
Yeah, I think that family, that the most they have to show for it is a school or a school hall or a building named after them or something like that.
Because the wealth ended up running
out because they didn't strategically put things in place to make it keep compounding on itself and keeping it out of the hands of every child or every adult that comes about claiming, putting claims to that money.
Yeah, same thing with the not only the will and trust, but there's individuals in place to make sure that those rules are followed, like
board of directors, board of trustees or something.
Yeah. So that's put in place to make sure that those rules are followed
to a T.
And then those, trustees just pass it down. So it's just a constant level of expectations and things. But, the point is that with a permanent, you have the ability, and a lot of people aren't aware of this, that with the permanent life insurance, you have the ability to be able to create that generational wealth and, set up a really good, solid foundation for your kids, and then the continuance of. So,
right.
Those are honestly like the main points that we wanted to go over. Maybe we touched on them in some previous episodes. You should go check them out to see. But also, we just wanted to reiterate that, right? Because again, like we mentioned before, life insurance is very important. It doesn't just start and end in the month of September. This is something people don't just pass away in the month of September, okay? Like
people pass away every day of every month.
Every day of every month. Oh, could you imagine the anxiety knowing September's coming and like some people are gonna
that's the only month that people pass away.
Yeah. Oh, I got goosebumps. The image and like the thought of it just like brought all this like, oh my gosh, what if that was anyways? But
things got a little dark. Things got a little dark.
The anticipation of knowing like the month of September.
You gotta be careful, man. Somebody gonna create a movie based off that exact concept. And that movie better have life insurance implemented in it if somebody's out there.
And I better get a portion of that.
Royalties.
Okay, but yes, okay, we've had a great time sitting with you guys and educating you guys and just teaching you on some things, whether it was...
We're not educating you. We're informing. We're not educating. We're not educating anyone. We're not. We're informing. We want other people to go do their research, ask questions.
Oh, yeah.
You
Don't just take our word.
Right. And you gain that, you educate yourself by actually doing the work of listening, taking everything for a grain of salt, going and doing your own research.
I see what you're doing there.
Do your own research, ask questions.
Yeah.
And then you educate yourself, because you have the power to do that. Teachers in high school, middle school, they didn't educate us. They informed us of some things. They informed us. Okay.
They informed us on what they was told to inform us on.
Right. not they didn't inform us on how to really live life out here in these streets, man. It can get a little greasy when you uninformed.
Okay. I mean, really though, do you know how to do your taxes?
Do you know how to implement credit and build credit? Do you know how to have good credit and bad credit?
Do you know how to write a check?
Do you know how to write in cursive? Do you know how to write in script?
Okay, then. So
that's a whole nother rabbit hole.
We'll leave that there. But yes, we can go ahead and wrap it up. I had a wonderful time doing this with you all.
It's been great. Stay tuned. It doesn't stop here. October is literally around the corner, and I don't know what awarenesses are in October. I know there's a few, but all in all, we're going to be touching base on just some mindset shifts, developing yourself. If you want to be a leader, if you want to be in business for yourself, an entrepreneur, getting more in depth with our personal lives and how we work as a couple, how we work in business, how we work in real life. So we're gonna, take a little pivot. We're still gonna implement, all the necessary topics around finance and life insurance, but we're gonna go ahead and just, make that little pivot and just start talking a little bit more about things that we go through and see on a personal note. But stay tuned.
Absolutely. Oh, I'm excited for that. Get to know us a little bit more. See how we navigate through just our lives, right? You get to know a little bit of us, get to connect with us a little bit more.
Right.
So I'm excited about that. We appreciate you guys for tuning in to Caffeine and Cash Flow.
Okay, radio voice personality.
You are now.
Yeah, right. Yeah, but it's been awesome. Thank you guys for tuning in. It's been an amazing journey this past month. We hope you guys have had a great month. We hope you've learned something from us, and you're more informed. And we hope to hear from some of you guys soon. Ask questions, reach out. It'll always be a pleasure. Also, you can reach us at Ask Bree and Lisa on YouTube, Ask Bree and Lisa on LinkedIn, Ask Bree and Lisa on Facebook, Ask Bree and Lisa on Instagram, Ask Bree and Lisa on Spotify, and also AskBreeandLisa.com.
Period. Yeah. Just Ask Bree and Lisa.
Ask Bree and Lisa. I just felt like going down that because it sounded impressive to me.
Right. AskBreeandLisa.com.
.com. All right, guys. Have a good one. Peace.